Good morning, team. Good morning, team. Today I want to go over how I use the Fibonacci. If you want to know more about the Fibonacci, I would YouTube it for day trading. Okay, it's a very, very important part of our arsenal. These are the numbers that I use. So I'm going to bring up the box so you guys can see that. So I use the 50 and the 61 area as my golden ratio zone, meaning that if price is above the golden ratio zone, which consists of 50 and 61.8, I'm looking for an upside target to negative 27.2%. If it's below the 50-61, I'm looking for the positive 127.2%. So those are my, let me just get rid of these so you guys can see what I'm working with here. So 0 to 100 is the box. So those are my configurations for my Fibonacci. Okay. All right, so if I see price do this, I'm looking for her to stay in that retrace. I'm looking for her to stay above this golden ratio zone, which consists of the 50 and the 61.8 area, right? So on my chart, I like to keep everything visual. So what I'll do is I'll color code that so that I know when I drop down to a smaller time frame that this area here is my golden ratio zone. Okay, so I'm looking for a price to respect this area and not break back below. I'm looking for the continuation up to what I call TP1, which is the negative 27.2. Okay. Now it works in reverse. So if price went down and broke the zone, I'm looking for a retest and a respect of the zone down to positive 27.2, 127.2. That's a little quick explanation of how and the numbers that I use for the Fibonacci. Now let's go to the chart and see what that looks like. All right, so you guys know that I have a special zone, the U.S. session that I trade between 9:30 and 12 o'clock. So within that time frame, I'm looking for price action to do a impulse correction, and that pullback be in my golden ratio zone or above my golden ratio zone, right? So you could take the information from any chart. So 15 hour, the stronger the time frame that you put the Fibonacci on, the bigger the break it is going to be on your smaller time frames. Okay. So right now I'm just going to show what it looks like on the 15-minute chart. The first thing that you want to identify is after the opening, okay, 9:30, the market ran down and it stopped. So from this stopping area, I want to see, well, where is the origin of this pullback or this retracement or this correction? So I go over to the left and I go down, and this is where it began. So from that beginning origin, I go all the way up, I draw my fib all the way up until where price action started pulling back. Okay? Once I identify how strong was that pullback, I then put in my zone. Okay? Now from here, I don't take my trade off the 15-minute chart. I go down to my smaller time frame, preferably my 5, right? I'm looking for what price action on the 5-minute chart is doing to my 15-minute golden ratio zone. Okay? You guys been working with me for a minute. You know that this guy is a spinning top. A spinning top pulling back into the 15-minute golden ratio zone. That is an indication of a strong possibility that that box is going to get respected. So when I see a spinning top, doji, or hammer, I bridge it. Okay, I put a line on the high of that spinning top and on the low of that spinning top. Okay, and I'm looking for the candlestick to break out either the high or the low to tell me who's in charge. Okay, so we got a break. The next candle, next 5-minute candle came in and it broke the high of the spinning top. My bias is long. I'm waiting for it to close outside of this golden ratio zone. Then I'm going to take that trade up into, my first destination is going to be the top of this, the top of the FIB. Okay. And then my second destination is going to be TP1. Right. As you can see, sometimes it doesn't make it, but that's why I have a target goal. Right? So I'm looking on, this is crude oil. I'm looking for 10 ticks on crude oil, which she did give. So my entry would have been the next bar that closed above the zone, and I'm looking for at least that high. Okay? So I entered here, and I went for that high there, which gave 1.04, which is almost 100 ticks. Okay? Now you guys know that I put my background in ticks. So those grid lines represent, so that was 10, 20, 30, 40, almost maybe 55, 60 ticks up on crude oil. And that was based on, I saw the 15-minute had a pullback. I went from the low to when that pullback started pulling back. And then I saw how the smaller time frames were respecting that area. I'm looking for a reversal pattern. I got a spinning top. I bridged the top and the low, the high and the low of that candle. And I waited for market to decide which side it was going to go on. And that's how I use my Fibonacci's. Any questions, guys? You know how to reach me. Text me, whatever. We get in the Zoom room and we'll build on how I use the Fibonacci. Okay? Have a great Sunday and talk to you the rest of this week. Peace.